So you guys just told me, right, we have manufacturing and we have non-manufacturing costs. We have another term that we can use for manufacturing costs. Let me just scooch this down a little bit. Another term for manufacturing costs is product cost. Makes sense, right? We're manufacturing a product, so those costs are also called product costs. And then non-manufacturing costs are also called period costs, and we're going to talk about why in just a second. Everybody read that? Manufacturing costs, another term is product costs, and non-manufacturing costs are period costs. It's actually about when you're going to expense it. That's the reason. So, let's just say, if you don't remember all of the accounting, just bear with me, there's going to be a point. But let's say we buy $50 of inventory. You know, like I bought this water bottle and I plan to resell it. Do you remember how I would record that?
There's two entries. One buy and you sell it.
Let's just say I paid cash. So I know I'm going to credit cash. What do I debit? Inventory, right? That's an asset account, right? Where would I find this number on my financial statements? Assets. Which financial statement is that? Balance sheet. Good. Okay. So if this is all that happened this year, what is my net income? How do I define net income? How do I get to it? Remember? I think I heard it. Did I hear revenue minus expenses? Gives me net income. Does that help?
It does.
So what's my net income? Oh, awesome, 0, right? Is either one of these a revenue or expense account? No, they're both assets, right? I paid an asset to get another asset. So I have no revenues, no expenses, net income is 0, just my balance sheet changed, right? Okay, what happens if I sold that inventory, this inventory, for 100? What do I do?
In the same year or a year later? It don't matter. It don't matter.
It doesn't matter.
It don't matter.
It doesn't matter.
So revenue.
Yeah, we'll say cash. Okay, debit cash, 100.
Credit inventory.
Credit inventory. I heard something about revenue.
Yeah.
Credit revenue for how much?
100%.
Good. What else? Mm-hmm. Good. Debit cost of goods sold. For how much?
There was something in there.
50, right? Because it cost us 50. And so I'm going to credit inventory for how much?
50.
Right, because that went away. I don't have it anymore, right? Good. So what kind of account is cost of goods sold? Oh, let me ask you this. What's net income? How did you get to 50?
Like it minus it.
Right, because
Oh,
this
you want
is,
me to put the revenues on any, and then the expense to this.
right, which of these is an expense account?
Cost of goods.
Right, cost of goods sold is basically just inventory expense. Right? Okay, so the point of this is, when does inventory become an expense?
When you sell it,
When you sell it.
or if it, or just those
Whatever, just we're totally gonna ignore that, but yes. So this is the main point. Inventory becomes an expense when it is sold. So until the inventory is sold, where do we find all of the costs of inventory? Everything that we pay for inventory, where will we find that before we sell it? Where did we put that $50 of inventory that we bought? We debited cost of goods sold when we sold it. But before we sold it, where did we put it? Inventory, right? Okay, and inventory shows up where? Right, it's an asset on the balance sheet. So, okay, so I'm just telling you that all the costs that go into our inventory, you will find them where? Before we sell them, they will be where? On the balance sheet, under inventory, which is an asset, right? And then we sell it and it becomes an expense, right? Okay. So, let's just see. It's important for you to know that all of our inventory costs, so in this example, we just bought a piece of inventory, right? But when we're talking about a manufacturing company, we have all those product costs, right? So where are we going to find all those product costs before we sell it? Where are they all going to be? Before we sell them. So direct labor, direct materials, manufacturing overhead. So they're manufacturing costs. We are manufacturing our inventory. So, right? That's what we're making. The whole point of manufacturing is to make our inventory that we hope to sell, right? Does that make sense? So let's, like, back to our potato chip example. All of those costs that go into making the potato chips, let's say we didn't sell any yet. Where are all those costs going to show up? On the balance sheet under inventory, right? All of our product costs are inventory until we sell them, and then they become what? Cost of goods sold. Good, okay. That's the whole point of this. So, I'm going to start abbreviating here. So product costs are direct materials, our direct labor, and manufacturing overhead. Sit in inventory accounts until sold. Right? Because they are an asset that we can use to generate revenue in the future. That's what an asset is. So then we also have period costs, right? And we said those are the non-manufacturing costs. So can you give me an example of a period cost? Okay, so pay accounting staff. So it's a In this case, right, this is not a product cost, it's not attached to the product. This gets expensed when incurred, just like normal. Right, it gets expensed when the accounting staff has earned that money. That's what this says, incurred. You guys heard that term in financial accounting, right?
So it gets expensed when, for example, I work in the accounting staff and I get the money from my account.
You may not have gotten the cash yet, right? We might owe it to you, but it's an expense when you've earned it.
So that account payable doesn't.
Right, you could have an accounts payable.
Ah, okay.
Yes.
All right.
So let's just say you earned, you're a really good accountant, right? So we're gonna say salaries expense $10,000 for the day, and then credit salaries payable $10,000. Right? It gets expensed when it's incurred. It's not, it doesn't matter if we've sold the inventory, it's not attached to the inventory. Does everybody sort of understand that? I know, he's making good money.
Accounting.
This is what I do.
Whoops.
What was the credit for that last one?
That was salaries payable, or it could have been cash, either way. Okay, so just to reiterate, the product costs are attached to the product. They stay with the product, right? It's an asset until it's sold and then it becomes an expense. Whereas period costs are attached to the period. So they're just expensed in the period incurred. All right, so let's do an example. We'll look at this one. Okay, so this says that you are a summer intern at a company that makes spy cameras. They require a financial statement, blah, blah, blah. Okay, classify each cost listed below as either a product or a period cost for the purpose of preparing financial statements for the bank. So we will start, we'll just go around the room. We'll start with Eden. Do you want to try depreciation on salesperson's cars?
Product cost.
So is our salesperson's cars related to the factory that's producing the cameras? Okay, so if it's not, so then what's the other kind of cost called? Period cost, good. And would we say that this is, we'll just dig a little deeper here, is this going to be a sales or administrative type cost, do you think?
Sale.
Sales, right, it's related to the salesperson's cars, good.
Oh.
Good. All right, Birch, do you want to try number 2, rent on equipment used in the factory?
I would say period cost.
What'd you say?
Period cost.
So let me give you a hint. Anytime it says factory,
I also get rent for a period of time.
Yes.
Product, but it's a product then?
yes, it's anytime it says factory, it's a product
Okay,
cost.
okay.
Yeah.
It's just like the rent on the equipment. Okay, gotcha.
Yes, that is confusing because you're going to want to debit rent expense. You don't. It gets added to the product.
And what, administrative cost?
So if it's a product cost, it's one of 3.
Overhead?
It's overhead. Good.
Why is it overhead again?
Because if it's not direct materials, which it's not, or not direct labor, then it falls into MOH.
Yeah.
Yeah.
Product.
Product cost, good. This one's a little confusing. We didn't really talk about this, so if you don't get it, there's no.
I understand.
Say that again? Okay, so you're really close, and without us having talked about it, that's what I would say too, right? It's used in the machine maintenance, so it's for sure product, and so we might want to say it's direct materials. But for things like lubricant or glue, solder, like little teeny tiny things that you can't really trace into the end product, it's an indirect material. So then it's overhead. Yeah. Like you can't really tell how much you used in the product. It's so little. Yeah, and some might need it more than others, so yeah. Salaries of personnel who work, okay, let me just say one thing real quick. So finished goods warehouse, think of it like this. You have the car showroom, which is not the same as the factory. Okay. Mm-hmm.
Oh.
Good. This one you can't, yeah, you can't tell, so we're just not gonna do it.
Oh, okay, cool.
Yeah, if it was the showroom, we'd say selling, but it doesn't really say, so we don't know if they just keep the products there.
Salary is always paid,
So if it was salaries of factory personnel, then it would be product.
Okay.
Anything that's related to the factory is product. Make sense?
Well, I mean, because factory, goods warehouse, factory, almost like the same thing.
That's why I said finished goods warehouse, they're specifying that it's different from the manufacturing.
Gotcha,
Yeah.
You can kind of use warehouse for factory for a little bit.
Yes, yeah.
Like,
I
in the,
won't-
like in the real world. I guess in that sense.
I won't give you anything nebulous, it should be obvious.
Yeah, okay, cool.
What's this next one?
Huh?
So,
What's this next one?
no, it's definitely gonna be product, just because
Ooh,
it's factory.
we're gonna go back there, we'll give you a chance. Soap and paper towels used by factory workers at the end of a shift. It is a product, good.
Just because it's factory.
Yep, good.
That's crazy.
It could literally be like,
Direct,
done factory is product.
what do you, direct material, direct labor, or overhead, what do you think?
Overhead.
Overhead, right? Yeah, because you can't trace the soap and paper towels into the product. All right. Jacob, you want to try factory supervisor salaries? Product, good. What kind? Yep, good. Maxi,
And should be product costly.
good.
And alloys.
Good. All right, this one is a little bit challenging because this is materials used for boxing the products for shipments overseas. They're normally not boxed. You want to make a guess at it? Anybody? Should we go back there? Camilla, do you want to?
I'll guess, I have no guarantee.
Yeah, no, I don't.
I guess product.
I'm going to give you the next one. Actually, just hang on. So this one, because it's not related to the manufacturing of it, we're just shipping it off. So it's a period cost. And then how about advertising costs? You take that one. Period. Okay, that's good. Sabrina, this one's a little bit tricky too, but it is product because it's related to the factory. Now, I'll just specify, it doesn't specify if these are assembly line workers and or supervisors. So because we don't know if it's all the factory workers, including the supervisors, we're gonna go with MOH. Yeah, that, I mean, pretty much you just dump everything in MOH unless it's specifically direct labor or direct materials. Okay, depreciation on chairs and tables.
I see that's overhead as well.
It is, so is that a product or period? Good. Okay, what about the wages of the receptionist? Is that selling or administrative? Okay. Come over here. How about the cost of leasing the corporate jet used by the company's executives? Is that, let's assume it's a CEO. Does that help? Admin, good.
What if they're fine tuning that?
It's still the CEO. He's still not touching the product, right?
What if he does know?
We're gonna ignore it. No. Okay, we're almost done here. Okay, Archer, how about the cost of renting rooms at a Florida resort for the annual sales conference?
Period.
Good. Is that admin or sales?
Yeah.
Good.
But wait, it's actually sales. Oh, so it's conference.
Okay.
It's just,
Okay, Lawrence. Okay, now this one you sort of have to be careful. Remember, like the potato chip bag. So with the potato chip bags, could we directly trace the wrapper? What did you come up with? Okay, good. Oh, sorry. Okay, so if it's a period cost, it shows up on the income statement when? When it's incurred. If it's a product cost, it shows up on the income statement when the goods are sold. Ooh, you got it. Extra points. Okay. Questions? Everybody okay? All right. So, on here, I tell you. Remember, in financial accounting, we find inventory and recurrent assets on the balance sheet. For a manufacturing company, inventory is going to be split up into 3 categories. Okay? This is where you get to see my fantastic art skills. So, the 3 categories are this. So, we have raw materials. So, if we are running like a bike manufacturing company, right? Some of our raw materials might be like the wheels and the like little titanium tubey things, right? Okay, makes sense, right? So that's the technical term for it. Okay, so this is, we haven't done anything with it, right? We've just bought it from somebody else. Then, if we work on it, it becomes work in process. And I am going to start abbreviating these. And so work in process means that somebody or some machine has put some of this stuff together, right? So this is where our little direct labor would come in. And they're going to attach the wheels to little tubey things, right? But they're just in process, right? At this point, they're not done, right? But if we keep working on it, we're gonna end up with semi-finished goods. And so we end up with whatever it is that we sell to our customers. Okay. Right, and then when we sell those finished goods, those things end up moving to cost of goods sold.